What's up, folks? Welcome back to the channel. Hope everybody's day is going great. And I'm doing another video here, so please remember to like, comment, subscribe. I'll eventually re-enable comments so people can leave some nice comments for me. Now today we're going to focus on something called candlestick charting. And before we get into that, you may wonder, candlestick, how about that? It's unlit, but yet it's lit at the same time. So anyway, if any of you have ever looked at charts, you may have seen charts like this where you see green and red bars. And this is actually a setting that is very commonly picked among anyone following stock charts that I'm going to outline today. So what a candlestick is, you see green and red, which green is bullish and red is bearish. So a bull and a bear are very commonly used in markets. Bulls meaning that the market is charging or accelerating ahead, and bear meaning that the market is in a more defensive or standoffish or declining position. And that's typically what the greens and the reds mean. So the candlestick, the idea is just like the candlestick here. You have a candle, you have the wick, and that's the same idea, just as in a general candle. So what you see solid green and red bars. The green and red, like I said, the green means up, red means down. And the inside of the bar is this movement of the price of whatever you're following, whether it be a stock or an index or a fund. It's the price movement during the day. And inside the bar, it's the open and the close price. And the stick itself is how far it moved during that day. And this is actually the S&P 500, just for an example. This is a candlestick chart on the S&P 500. The default setting back here is actually set for candlestick. That's what I pick because that's what I like to use. You can see in the last 5 days we actually have a bit of a downward trend in the index. The month of September, they say, is a rough month for investing and for markets. Not sure why that has to be, but I guess it is what it is. So here's another visual of what I was saying. So an increasing bullish candle stock will be green, and you see the high and the low at the bottom and top ranges of it. So the full stick goes all the way from the low point to the high point during the day of trading. And the middle, or the green part, that's the actual open and close. And remember, you have pre-trading before the market actually opens, and you have post-trading where there's movement in between when the market opens and closes. And similar with the bearish candle, the red is a downward trend. Inside the candle is the open to the close, and then the full day's low and full day's high represented by the stick. And this is a visual of bulls and bears. So again, bulls represent green, which represent the market being up, which is what we like. Bears represent a drop in the market, or the red. And that was just a quick, very brief overview of that. If you like that, please remember to like, comment as soon as I re-enable it, and subscribe to my channel. Thanks so much, and I'll be bringing you more awesome content going forward. And that's it for today. Look at that.